In this video, I'm going to show you how to identify institutional candles. Institutional candles is the last opposing or multiple opposing candles before a strong directional move. Basically, it is the manipulation phase or the tricky area where big banks or institutions manipulates the market for liquidity. You can easily identify institutional candles on the price chart. Yes, you can identify them with your naked eyes. You don't need any indicator to look for it. So keep watching this video till the end, because I will show you guys how to identify these candles with your naked eyes, and I will equally explain the logic behind them. So if you are new to this channel, consider subscribing to this channel, and if you have interest in joining my Telegram channel or following me on Instagram, please check out the description box below. I have the link right there. Most times people keep asking me, what is smart money? Now let me explain this quickly before I start showing you how to identify these institutional candles. Smart money could be a company, an organization, a person, or a group. It can be anybody with so much money that can manipulate the market. I hope you're understanding what I'm saying. Smart money can be the banks, they can be hedge funds, they can be billionaire, or even the government. Just like I said before, anybody with a lot of money that can manipulate the market is smart money. That's why we follow their footsteps, because trying to trade against them, you're not gonna win. But when you try to trade with them, you see yourself being at the right side of the market most of the time. So remember, I said they manipulate the markets for liquidity before they move to their main direction. Now let me show you some of this example. Let's say that market is in an area that looks like a good selling zone. Let's say this is a resistance level and price is at this level looking like a good selling zone. What are we gonna see? We're gonna see them coming back to that level, because everyone is believing that this level is gonna hold, and they're gonna be looking to sell from here coming down. And you see some of them that are already in a trade, their stop loss is placed above this resistance level. So what are you gonna see? You see them pushing higher. Once they push higher, they clear out the liquidity, because if you understand this concept, you know that when stop loss are placed, that is liquidity money, so they will come to target the money, clearing out the money. Those that are looking to buy the breakouts, they will still trigger their trade, then moves back to that direction. This is how to identify these candles. Once they clear out that liquidity, you see them moving quickly to that direction. So those that enter trade right here, they will be taken out of their trade, and those that are looking to buy the breakouts, you see them losing their trade. That's the same thing that happens for a support area. You might see price in a very good support zone, and that zone you will see it looking like a very good zone where you can buy, and those already in a trade, their stop loss is placed few pips below the zone. You know, this is how this strategy works. And those that are looking to buy the breakout, their order is still placed right here. So once it's trying to break out, you see them in the trade. What will you see smart money do? Smart money will come back, clearing those liquidity resting below here. They will trigger them into the trade, and now you see them moving to the predicted direction. You see they will first take you out of the trade because they don't want you to trade them. They will take you out of the trade, then move to the direction. So another good thing about this is their institutional candle. Once you identify this candle, what you do is you wait for them, because definitely they'll come back to mitigate those zones, then move to that direction. I hope you understand. Most times you might not see a perfect example on the price chart, but you have to train your eyes to see some of these things. So let me show you some of these examples. This is gold, the 15 minutes time frame, and I want to show you one of the examples that I have right here. So what can you see from here? What you can see is that price gave this first touch, and it came back to give this second touch, which still gave a reaction. And when it gave the reaction, what do you need to know? You need to know that those that are using this retail based strategy, their stop loss is placed below this zone. I know you once used this kind of strategy, and I know you understand how it works perfectly. The stop loss is placed below this zone. What can you see? Price respected it, came back, respected it for the second time, and people will be waiting for price to come back, respect it, and to make the most out of the trade. What can you see? Smart money enters the market, came lower, clearing those liquidity, resting below here, because a lot of people are trading, and their stop loss is placed below here, and they will clear out those money, clearing those liquidity, and you see them rapidly moving out of this area, breaking structure. I hope you can see what I'm trying to show you right here. They rapidly move out of those area, breaking structure. You can see how big the candles is. So the number of candles doesn't really matter. Maybe when you check on the higher time frame, you might see one single candle doing this, but when you come down to your lower time frame, you might see multiple candles. So what you need to understand is just the concepts and the intentions of the smart money. So the number of candles doesn't really matter. So what did you see them do here? They clear out those liquidity and move out rapidly. So when they moved out, what you need to note is they haven't really closed their positions. So this is a good zone. They will come back. Like I said, they will come back to mitigate those zones before they move back to their predicted direction. So what can we see? When they move out, you see them come back to those zones to mitigate it before moving back to the direction. I hope you can see what I'm trying to show you very clearly. And what you need to note is you have to try to avoid smart money in the market, because they plays a big role in the market. What can you see? Even when they were returning back to the zone, you see them building this liquidity right here, and here they built liquidity, and even before price, this spike swept the liquidity before it comes back to mitigate that zone and move to direction. So try to avoid smart money. Try to trade with them, because if you don't trade with them, I'm telling you, you might be at the wrong side of the market most of the time. But listen to me right now. Most people think when we talk about smart money, we are trying to tell them that the strategy they are using doesn't work. Listen and listen good. Other strategies work. Understand that. I'm not saying that other strategies work. Just imagine someone that bought from this zone. It has gotten this first touch, and let me show you. It has gotten this first touch and this second touch. The person must have made little money from this before this drop down. You understand? Depending on how you manage your trade, the person must have made a little money before the drop down. So other strategies works, but you have to be careful while trading them. Be strict in moving your stop loss, because smart money will always be involved in the market. They will always look for liquidity. I hope you understand what I'm saying. So I think I have some other examples. Let's look for it. Okay, I have other examples right here. Let me show you some of the examples right here. I think I have one down here. Okay, all right, so still explaining the same thing right now. So what can we clearly see from here? Like I explained with the first example, we can see very clearly that here was looking like a good buy area, a good support zone. So what can you see? Price came back, swept those liquidity that is resting right here. You see, this was a very good sweep. Even if you try to place your stop loss below here, you can see that price came there, swept that liquidity. After it swept the liquidity, it rapidly moves out of those area. You can see very clearly it moved out of that area. It's a very good candle that has momentum. They move out very quickly when they manipulate the market. Now you see them coming back to mitigate those zones, and when they mitigate those zones, you can see their move, how they rapidly moves to that direction. So they won't like you to be involved in the trade. They will take you out of your trade before moving to that direction. So this is another example right here. You can see here looking like a very good buy zone, a very good buy zone. And what can you see them do? You see them move slower, clearing this liquidity resting right here. Once they clear this liquidity, taking you out of the trade, you see them move to your direction. Once they move to your direction, you see those candles breaking structure. You can see this candle has a very large momentum, and you see them coming back to those zones. You see them, it has returned back to those zones to mitigate those zones. Coming back to those zones, what are they doing? I explained that when they clear out this liquidity, they move out rapidly. When they move out rapidly, they don't have the chance to close their orders. So they are in losses. You know, they sold the market to buy. So when they sold, they are in losses and they didn't close it when the markets move to the direction of the buy. So what do? Price comes back to that zone. So they close at break even, or they close in small losses before moving to the main direction. I hope you're understanding the concepts. I'm not teaching you how to trade it, but I'm just trying to train your eyes so you will be able to identify them. Hope you're understanding what I'm saying. So this is one more example right here. You see price forming equal lows. You see liquidity resting right here. You see them coming back, clearing those liquidity. You see them clear those liquidity, and price moves out. So this is how it works. It's like I have one more example. People keep asking me, does this strategy works here? Does it works here? Man, it works on stocks too. It works on currency pairs. I say that a lot of times. I tell people, try things out on your own, because the only way you understand this concept is going back to your charts to look for some of these concepts. I hope you understand what I'm trying to say. You won't know it overnight. You need to go back to the price charts, try these things out on your own before you can perfect how to see them in the market. Okay, so this is the last example for today. I've been showing you examples for a bullish market, so this particular one is for a bearish market. And remember, this is Nasdaq. I hope you to stop asking me, does it work here, does it work here? That's why I want to show you one of the examples on Nasdaq. So what can you see right here? You can see that here is looking like a good sell zone. You can see it first touch and second touch, which moved out, and they'll be expecting price to come give them the third touch. So remember what I said, that those retail based strategies, they still work. You can see it right here. Someone that took a trade from here must have made a lot of money before price starts to return. You see, one thing you need to note is market gives each strategy a chance to play out. That's one thing you need to understand. The market gives each strategy, as long as it's a proven strategy that works, the market gives them a space to work out. So aside that, you always see smart money manipulating the market. So any strategy you trade, even with that trade smart money, we are very, very careful, and we trade with our eyes open. You understand? Like I've been explaining, here looking like a good sell zone, and you can see the money is placed above here. What else can you see? You see price coming up, clearing those liquidity, taking their money. Those that are trying to buy the breakout, they will be triggered into the trade. And what can you see them? You see them moving to that direction. After moving to that direction rapidly, you see them coming back to mitigate those zones, and you see them moving lower. And that is what you can clearly see right here. You see, let me go to the 2 hours time frame so you see this clearly. Hope you saw what happened right there. They manipulated the markets, they cleared those liquidity resting right there, moved lower, come back to mitigate the zones, and you can see how far they moved. So the best thing we can do is to try to trade with smart money, because trying to trade against them, I'm telling you the truth, you're not gonna win. Understand what I'm saying? You're not gonna win if you try to trade against them. So this is all for today. Move to the price chart right now, try these things out on your own, and try your eyes to see some of these things. So today's video was focused on how to identify those moves, trying to help you understand how those moves work. So thanks for being part of this video. This is still me, Solomon Wisdom, aka Born to Trade. If you haven't subscribed to the channel, consider subscribing, and if you have interest in joining my Telegram or following me on Instagram, check out the description box below. I have the links right there. Now I want to ask you a question. So the question is this: are you gonna try these things out on your own? Will you move to the price chart to check out if these things truly work, or will you just watch it like other videos and go back to sleep? Drop your comments at the comment section. If you're gonna try this out, tell me. If you're not gonna try it out, you're gonna sleep, equally tell me. Okay, thanks for being part of this video.